Welcome back to Breaking Banks, the #1 fintech radio show and podcast globally with 7 million listeners in 178 countries. This week we travelled all the way to Paris, France to attend the Paris FinTech Forum. You're going to hear from a bunch of our old pals at the Paris FinTech Forum this week, including Currency Cloud, Tandem Bank, Zopa, eToro, and others. So you'll hear from that in a moment. But before that, we went down to Oz, to Sydney, to a new team working on relationship lending there, a team called Credi. And we heard about what they're doing in terms of lending as a software service. At Breaking Banks this week, we caught up with the team down in Oz. They're not battling the bushfires, or they might be existentially, but they're working on making loans quick, easy, and affordable between friends and family. And this is CEO Tim Cadine of Credi. We just call him Tim. What does the K stand for, Tim?
It stands for Kendrick. How weird is that?
Kendrick. I know. Sounds very, very formal.
Well, it caused a lot of amusement at school for a long number of years.
And I believe you're coming to us from Western Australia, Fremantle.
I am. I do split my time between the West Coast, and we have an office in Sydney. So there's a lot of travel involved for most Aussies who are dealing interstate, and actually, as our business is now reaching into the US and Europe, it's travel all the time. I think Qantas told me last week that I'd done something like 34 flights in the last 12 months. So I'm definitely a friend of the national airline.
If you want to compare travel stats anytime, I'll take you on.
Okay. Easy, yeah.
No. Okay, so I want to figure out, what is relationship lending, and where does, in typical sort of fintech terms, what's the technology play here?
Okay, so relationship lending is a kind of old bank term, if you Google it, that's sort of denoted lending to people they have a relationship, which is kind of a bit weird for me, given that most lending decisions are automated and there's very little relationship in it at all. So relationship lending in the sort of the more modern context is where people are financially transacting with people that they know. Degrees of trust, close people, children, not quite so close, people who are maybe overseas or in different jurisdictions. So the technology play here is to provide a platform that recognizes the transaction and actually gives individuals lending to individuals or businesses exactly the same toolkit that a bank would use, all the way through from documentation to repayment automation and even through the imminent guise of open banking and visibility in the general credit environment. So it's kind of intersecting those two worlds and bringing informal lending up into the new decade.
Now, this is really how lending started and banking started, to be honest, right? Banking was community-based. It started with people in the community supporting others and things like that. So, and insurance also, right? So I guess sort of we're getting back to our roots.
Yeah, we are. I mean, a lot of people ask me how big is the marketplace, and look, it's always been huge. It's received a lot of sort of public parlance, the so-called bank of mum and dad. I read an article in the press yet this morning that's saying, with the property uptick in Australia, the bank of mum and dad is, in full flight again. But it's always really been there. I think the issue more is that individuals in a whole load of areas are doing their own thing. I mean, you see it in property through Airbnb, you see it in vehicles through Uber, and now people are wanting to be self-determinant with their money. And obviously, with that comes friction, and therefore a platform is needed. So it's as old as the hills, and it will endure for a long time to go.
Now, we've seen a lot of use of peer-to-peer. Obviously started with Grameen Bank on the financial inclusion side on the subcontinent. But more recently, of course, we have some pretty big peer-to-peer lending organizations, Lending Club, which IPO'd. We've got Prosper. We've got Zopa in the UK. We've seen others enter this market more recently, Funding Circle, Lending Tree, Kiva, and others. Is there, with relationship lending, it seems an obvious target for more social types of lending structures. Is social media an important part of Credi's foundation for establishing these relationship loans?
Okay, so it's an interesting one, actually, because I think peer-to-peer, in terms of the companies you've mentioned, has kind of hijacked a term that kind of easily describes what they do, whereas in fact, the basis of the financial decision in those environments are really through people who don't actually know each other. And in fact, they carry the same kind of default rates as traditional banking, and they use the same kind of, as I said, credit decisioning. And that sort of leads to a point where the different marketplace, which is the pure or true peer-to-peer relationship, is where people have a relationship between people that they know. And on our platform, which has thousands of users, that's exactly what we see. People come to us because they've identified a need to either help someone or be helped by somebody, and they've usually got that that relationship already in mind. And in fact, there's some regulatory characteristics that we play off, in the sense that we're not an organisation that needs a huge regulatory footprint across the multiple jurisdictions, because the people are not performing a credit activity which would be described if you were sort of marketing through those kind of platforms. So
it's more informal credit.
Yeah, it is informal credit that we are, I guess, informal.
You're an informal credit that you're formalising.
Absolutely.
Through your structure. Yeah.
Yeah. Look, it's all about taking the friction out, and I think it's an interesting story for me because back in my sort of past, I happened across Australia's first peer-to-peer lending platform that predated people like Society One and RateSetter. It's a small little company called iGrin, and it got like $1 million on the market and a few thousand users. I actually bought it. In fact, I still own it. I own the code and the sort of the IP to it, but I never relaunched it because I saw that those platforms really get to a point where they're struggling to find enough customers. They're struggling to make money, and I thought my journey to creating the Credi product, I had to go underneath that, and that's where I landed, which was managing the transactions between people like us, between you and your friends and family, and businesses businesses that you invest in, etc. Where the key to the transaction is the relationship, not a traditional credit scoring decision that underpins the infrastructure.
So what you do is you take independent parties that may be one-to-one or it may be many-to-one, where either someone says or a group of people say, we are going to lend money to this individual for this purpose, and we need a platform to help us execute that. Is that a good description of Credi?
Absolutely. I mean, look, the alternative before Credi arrived was a loan document, right? You get a piece of paper. And comparing a loan document to Credi is like using a map to navigate your way up and down the country versus Google Maps. A loan is something that has a beginning. It has a negotiation. It has an establishment. It's eSigned. Contract is completed. It then has a repayment cycle. It then is tweaked and changed. Repayments are made. They're forgiven. Overpayments, underpayments, late payments, early payments. Loans are renegotiated. So the platform effectively does all of that and has the sort of Google Maps sort of utility and flexibility versus the historic I'll send you something and we'll sign it, which is kind of out of date the minute it's been signed and doesn't reflect the changing circumstances.
That's good progress. So tell me a bit about the foundation story behind Credi. How did you guys get started? There's an obvious alignment in terms of your wish to sort of assist people and seeing something that's informal that could be easily structured through tech. But tell me a bit more about how it came to be, the company.
Okay, yes. I had a sort of a background, all the way through from economics to accountancy, through to accounting software companies, Sage in the UK. And I happened across, and I was invited to recruit to join a US corporation about 10 years ago, which was in micro lending, which is so-called now known as payday lending. I didn't know it at the time. And, we were involved in about 150,000 micro transactions a month, like big scale operation. I got...
What was the size of the loans? Typical size?
$500 over like 30 days.
Right.
And, that was back in the day where there were very few operators. The default rate was single-digit percentages, where it's now, 34% default rate in that kind of sector. And the government has almost run those operations out of town. But what I got from that is a very clear understanding of the damage of high-cost credit. And I was able, having sort of exited from that position, to look and investigate the market of the other side of the fence, which is effectively, well, how can credit be delivered, which is benign, which is friendly? And as I happened, forced by my 27-year-old to open my own branch of the Bank of Mum and Dad, and I always knew from the phone call, how much money he wanted. Hey, Dad, long pause. God, he needs a lot of money. Short pause, not quite so much. And it's always the same, right? And so, of course...
Dad, I've really missed you. Oh, boy, this is going to be expensive.
honestly, it was always like that, right? So I looked around and I thought, look, I'm a tech guy. I've worked in tech. I can figure for this out. And there's nothing. And still nothing that does that, right? So I applied a bit of science. I went off to RMIT and I said, look, can you do a study for us? And this was the sort of lift-off moment. Got a report back and it said, lending, RMIT, lending between friends and family, an invisible phenomena. And I went, well, that's it. So we went and built the platform. And, so it's a bit like, Saul on the road to Damascus. I kind of went from an environment where the APR was like 300% to an environment where the APR is about 3%. So there was a real complete 180 in terms of the credit environment that I was working in. And it's not only been a pleasure, it's been a great success.
Tell me how people set up a loan on the Credi platform today.
It can take seconds to a few minutes. It's as simple as we built it almost along the lines of what you want to do, like designing a car, really. Log on to the platform, sign in, get an account, and then you go ahead and build a loan. You can build it as a borrower or as a lender. What do I want? How much money do I want to offer? Let's take it from that side. What interest rate am I able to pay? How long do I want it? When do I learn at the start? I mean, in the banking environment, it's all linear. This is flexible. I want the money today, but I want to start repaying it in 6 months' time. I want to pay a token. I want a balloon repayment at the end. And then it's sent to the counterparty who and that person receives it and they can negotiate it. And that's the starting point of the way that we're offering a sort of socially acceptable product. Because, the person on the receiving end can say, hey, click, look, I can't help you. It's not appropriate now. Whereas historically, loans for under $2,000 are free and always have been and kind of always will be, which is a kind of nod to the payday space. But, it's a counter to the chat down the pub where you go down the pub and you had a couple of beers and then, at the end of a few beers, you get the money chat. So can you help me? Well, it takes that away.
So let's say I come on Credi.com and I set up a loan to lend my son some money to buy a car. I contribute some, but I say to him, I want you to learn how to pay back a loan and I'm going to lend you this money and but I'll pay for half the car, you pay for the other half, but I'll loan you the money to buy it and you can pay it off. So that's a fairly typical scenario. But in the instance where you lend money to maybe someone that you don't know as well, but the loan gets into trouble, how do you guys handle that platform?
Okay,
how do you handle that issue?
Yeah, there's a couple of interesting points there. Firstly, when we started the business, like everything else, I built it for me. And what I realized down the track is that there's a number of layers of trust. And what you're alluding to is the fact that people may want to sort of put more hooks, for want of a better word, on it. So through the process, I mean, you can do such things as, for a car, for example, in Australia, you can take a secured charge over the asset. So you can put some security interest registration on it if you wish. Also, and this is where technology, all the sort of kind of moons are lining up. The move towards open banking has presented us with a very interesting sort of endpoint, and that is the simple process of setting up the loan, managing the repayments, processing the repayments through the banking system has actually put the Credi transaction, Credi loan reference 1234, bang in the sort of under the microscope of other credit providers. So we're getting to the point that not only are we establishing a loan and automating the repayments, but we're actually making credit visibility to mainstream credit. So, when a bank looks at the transaction statement and goes, look, I'm looking to lend you money for your house. I see you've got a loan there that's a relationship loan. Tell me about that.
That's Credi.
And
that's cool.
The government has actually gone on record through ASIC in Australia, and they've actually said more recently that we want you to look at someone's entire financial circumstances. So the open banking movement that is trundling across the world has kind of presented us with a sort of an unprecedented closing of the sort of the circle. We now are able to intersect for the first time the world of informal and I allude back to RMIT here, invisible transactions, and we're able to actually overlay them and intersect them with traditional credit providers, which means that, if you're lending to someone, I say a cousin of yours that's, in another part of the country or the world, then they might want to borrow from you, but they've also got to be aware, or will be aware, that there's some hooks. Now, of course, to your original question, of course, you now have a contract, you've now got repayments that have been structured, you've got evidence of repayments, you've got all the necessary details that if it does go bad, you've got a pre-packed solution to pursue all the normal remedies that are available to you in law to collect against that.
Okay, no, that answers. But you guys don't handle collections and stuff like that internally.
We're software as a service.
You just facilitate. Yeah,
we facilitate right the way through from inception through to visibility. Now, there's a sort of an endpoint that may drop off from that, and because what we're now starting to develop is sort of the concept of neo credit scores. So, to some extent, we've got some conversations with traditional credit providers where they're saying, look, we're going to turn someone down for a loan here, but we're going to ask them to perhaps go and figure it out themselves. And we'll use the performance of the Credi managed loan for a future credit decision. So if you've shown that you can manage a loan from your dad, that'll count in your favor when you come back to us in the future. So the smart sort of fintechs around the world and the smart neobanks around the world are actually starting to wake up that a binary decision, can I lend you or can I not lend you, actually has a third one. I can't lend to you just now.
Let me give you an alternative and develop a lending history, and we can.
That's introducing a word back into the banking system. I think it's called trust.
Yeah, I mean this. We've seen various startups attempt similar things. Structured lending and so forth that enables you to build a credit score over time and so forth, which I think is great. But these, let's talk a little bit about sort of these neo credit scores. What do you see emerging behaviourally, or from a non-traditional scoring metrics that would represent something like that?
Yeah, look. Traditionally, credit scoring has been exercised through the credit reference agencies, who I think are in danger of having their existing platforms being rendered obsolete. Certainly in the micro lending world, no one even reports to the CRAs, and they are using almost universally the transaction.
When you say CRA, a credit reference association? Or?
Yeah, credit reference agencies. Vida, Experian, Dun & Bradstreet, Tran, etc. So the fintechs of the world and increasingly the banks are actually using bank statement categorization. So that's where they're reading into the platforms.
So it's sort of mainly cash flow and analytics. So looking at your accounts, looking at have you got more money going in than going out, and does that reflect an element of control over your spending that would support a credit line, right?
100%. And so our job in terms of the informal lending space is to provide information to that. Now, that's one side of the intersection point. For our part, our objective is to develop scoring within our own platform. Very much in the early days, it'll be alongside like a rating system, 5-star rating, 4-star rating, 3-star rating, whatever, so that the performance of your loan within the Credi platform can actually be viewed if someone wants to lend money to you again. Because we've been only been going 4 years. But we're already seeing people come back with second and third transactions, et cetera, et cetera. So it's a bit early for us to actually generate our own performance scoring, but certainly it'll happen. In the short term, for us, contributing our performance data to traditional banks, credit providers, to enable them to assess the performance for their own decision will be where we start.
Now, you guys right now are a software as a service platform that enables people to come together. You're not actually a financial institution, are you?
No, absolutely not. We've worked very hard not to be. We're growing.
Could you see a time ever when Credi offers to sort of pitch in with the lending, maybe, half and half?
Yeah, look, I mean, we've got a roadmap that's as long as your arm. I think it's got about 168 pieces in it. And at the moment, as I said, we're focusing on open banking and a global rollout, going through rounds of funding.
So talk about your rollout. Where are you currently? Where do you operate? How many languages are you available in?
Okay, so we've got users in 26 countries. That came through from opening the platform out. And we are now rolling out language versions to cover French, German, Spanish, variations of Spanish, Portuguese, Polish. The rollouts to other countries, we're picking the main markets, which is US. We have Credi Inc. Set up, UK and Europe, particularly for both open banking. We're getting a number of approaches for JVs in countries, Nordic states, Indonesia, where kind of it's the sort of local market knowledge is saying, look, this platform will apply to Sharia law lending. So we see that our rollout is one, I suppose, our own ambitions around the world, driven by taking.
But the contract law that underpins this arrangement, if you want to call it that, would vary country by country.
Absolutely will vary by country. So, in Australia, and there's some nuances, we have something like a Div 7A in Australia, which covers lending between individuals and their company, and the 401s in the States. So there'll be local country variations. We've just hired an internal legal counsel to help that through. And we've also got a tie-in with an international, one of the top 5 international law firms to help us with our rollouts in those countries. So to some extent, our sort of journey is increasingly going to sort of formalize, as I said, as we go through the funding rounds. But as I say, it has to some extent been driven by both opportunity and people wanting to take us into those territories.
Good, great. Well, what do you got planned for 2020? Specific.
Plan for 2020 is really clear. As I said, the open banking integration and moving the money to give us that footprint on the bank statement to give credit visibility is critical. We want to work with remitters so that we can handle cross-border transactions, because a lot of the money moved around the world is repaying family loans as people globalize. Get our footprint in the UK and in the US. Go through funding rounds and seek strategic relationships that then start taking us into other organizations' client bases, either on a collaborative basis, et cetera, And then as we go through the end of 2020, we'll look at things such as crypto. We'll look at how we can tokenize the transaction when the token can replace fiat currencies, that'll be something that takes on board.
You're going to lend in crypto, I guess. Or you're going to enable people to lend crypto to each other.
Yeah, I mean, give me 5 Libras.
Interesting.
And it ticks back. I mean, it's a logical extension that will happen. At the moment, cross-border transactions are there still is the exchange rate conversation. And, people don't stop lending money to their friends and family just because they live the other part of the world.
Absolutely.
And that gives even more reason to have a system of record, a universal point of truth that just takes the friction away and lets them get on with their relationship when they can support each other financially without that getting in the way.
Great, Tim. Well, thanks for joining us all the way from Australia. I trust you got no family involved in the fires there, and everyone's safe.
We're all safe, and Western Australia has
not been as affected. Yeah,
not been affected, and it's been a huge thing for Australia, and I don't think the scale of this
huge thing for the world. I don't know whether you guys realise how much of a topic has been talked about offshore, particularly in terms of the government's position on climate. So it'll be interesting to see. We won't get into that now because we've run out of time, but that's for another show. Where can people find Credi quickly, Tim?
Easy, credi.com.